Hello, this is Bichelin. In the previous video, I mentioned that if the market sentiment remains positive until the next video upload, we could possibly expect an altcoin bull run. The market sentiment is still looking great. Then today, with a joyful heart, let's dive into some exciting topics. As promised, we'll cover altcoin sectors that are expected to skyrocket during a bull run. But as the saying goes, no asset beats the market, right? So let's first check the market conditions. Let's begin the video with a happy heart. Alright, let's take a look at the US Bitcoin spot ETF net inflow chart for the first time in a while. There's one noticeable change compared to the past. Yes, that's right. The selling pressure from Grayscale's GBTC has significantly decreased. Whether Bitcoin was at $50,000, $60,000, or even $70,000, Grayscale continued to unload selling volume daily without worrying about the price. But now, their selling pressure has noticeably reduced. Perhaps the reason lies here. Grayscale's GBTC assets have been sold as a trust-based product long before the US spot ETF was approved. One key characteristic of GBTC is that once purchased, it comes with an agreement that prevents selling for 6 months. Therefore, since the Bitcoin spot ETF was approved on January 11th, and with the 6-month holding period ending in mid-July, it's now been a little over 2 months since then. The agreements that prevented people from selling have now expired, and the cautious sellers who were waiting have likely cleared out their positions at the lows. Now, it seems like the market has entered a period of stabilization. I believe this is where the real battle begins. Returning to the ETF net inflow chart, there's another notable point that stands out. When Grayscale was aggressively offloading its supply, it was BlackRock that absorbed all those volumes, right? They turned the massive selling pressure into buying and continued the battle alone. Recently in the inflow chart, it appears that Fidelity has consistently been playing the role of a supporter. Fidelity is the third largest asset management company in the US, managing approximately $5.2 trillion in assets. When we think of the well-known large asset management companies in the US, the top three are typically: first, BlackRock with $9.7 trillion. Second, Vanguard with $8.7 trillion. Third, Fidelity with $5.2 trillion. Here's a fun fact for you. Fidelity manages assets indirectly through a method called assets under administration. This includes managing the assets of numerous external institutions, such as retirement accounts for U.S. companies. When you include the scale of these AUA assets as well, did you know that Fidelity actually manages an astounding $11.3 trillion, surpassing both BlackRock and Vanguard? As mentioned earlier, Fidelity primarily manages conservative assets, such as retirement funds, making it a company that leans towards safe and conservative investments rather than aggressive ones. The fact that Fidelity's inflows have been continuous recently can be interpreted as a very encouraging sign. Meanwhile, there was a report by Decrypt on the 25th local time stating that suspicions are spreading among Bitcoin investors that the dealings between Coinbase, the largest cryptocurrency exchange in the US, and BlackRock, the world's largest asset manager, may not be entirely flawless. Last March, a Bitcoin exchange-traded fund, ETF, approved in the US, led to a significant influx of capital, causing Bitcoin prices to reach an all-time high. However, investors are now claiming that the current price should be much higher, and they criticize that Coinbase is not actually purchasing the Bitcoins requested for most Bitcoin ETFs, including those from BlackRock. Instead, they are allegedly issuing IOUs or paper Bitcoins. This has led to a growing outcry among investors. What does this mean? To summarize, it is as follows. BlackRock, you keep saying that you've been buying Bitcoin like crazy, but then why is the Bitcoin price stagnant? Are you just bluffing that you've been buying it? You're in cahoots with Coinbase, right? You didn't actually buy it but are lying about it? This is the suspicion that's arising, and it seems like a pretty reasonable doubt. When the SEC, Securities and Exchange Commission, approved the Bitcoin spot ETF, it stipulated that asset managers must hold actual Bitcoin corresponding to the amount of the ETF shares. The responsibility for managing whether these assets are properly purchased and held was entirely delegated to Coinbase, the NASDAQ-listed cryptocurrency exchange. This has led to suspicions that Coinbase has turned a blind eye to BlackRock's misconduct. Such doubts are certainly reasonable. There is also data that intensifies these suspicions. This section shows that BlackRock had net inflows. In this section, we have the Bitcoin price. However, the rise in price does not necessarily coincide with the days of net inflows. On the other hand, if we look at Fidelity's net inflow data, we can see that each net inflow from Fidelity corresponds with a rise in price. Here is the logic presented alongside the data. Price movement: BlackRock buys. Price does not rise. Fidelity buys. Price increases. Thus, it leads to the conclusion: BlackRock fake purchases Fidelity, are genuine purchases. While this logic does emerge, could it be that the reason the price did not drop and was defended during the period when Grayscale was aggressively selling was because of BlackRock? Anyway, I can't fully side with these suspicions against BlackRock. Being human, I sometimes think, really? BlackRock could be doing that? However, it's interesting that the moment I start to have these doubts, I actually feel better about it. Why? If it's true that BlackRock engaged in fake purchases, the more these suspicions arise, the greater the pressure for investigation will be. Shouldn't we fill the empty coffers even now? But then again, BlackRock isn't exactly a company without funds. If Bitcoin has been able to defend its price this well without BlackRock, what if that issue turns out to be true? If BlackRock actually starts buying Bitcoin, I can't help but think that the buying pressure could become a driving force to break through the tunnel leading to a bull market. Of course, this is just my personal insight. Companies like BlackRock, Fidelity, and Vanguard, which are among the leading asset management firms, are unlikely to engage in actions that would tarnish their reputation built over decades or even centuries, rather than focusing solely on immediate profits. So, let's remember that rumors are just rumors. Digging deeply into speculation is ultimately a waste of energy, don't you think? Let's take a look at some official information. Recently, a survey conducted by Citibank Group targeting family offices showed that there is a high level of interest in virtual assets. What is a family office? It usually refers to a group focused on efficiently managing wealth preservation and intergenerational asset inheritance. In other words, it pertains to families that have been wealthy for 3 generations. A recent survey found that there is a growing interest in cryptocurrencies among these family office investment groups managing the assets of affluent families. An interesting result from the survey is that family offices in the Asia-Pacific region are leading in terms of the adoption of digital assets, with 37% already having invested or shown interest. In contrast, 83% of family offices in the Latin America region are not prioritizing investments. This indicates that families accumulating wealth in Latin America are not entering the cryptocurrency market. What are the representative countries in Latin America? It's Brazil, which we focused on in the last video, right? This means that Brazil has barely even started in this regard. Since this is the survey result from Citigroup, the 4th largest banking group in the US, it's a hopeful indication. The prevailing outlook is that liquidity supply will gradually come in due to political and economic issues. I believe that at this point, rather than focusing on economic issues, we should examine the issues that will have a direct impact on cryptocurrencies. At this moment, what I consider most important and am looking forward to is the issue related to the SAB 121 bill. What is SAB 121? It's a massive issue in the cryptocurrency market created by the fantastic collaboration between Biden and Gary Gensler. To discuss this issue further, I'll provide a detailed explanation of the above bill. The intent of the bill is as follows. It is a guideline that requires companies holding customers' cryptocurrency assets to record them as liabilities on their balance sheets. What does this mean? If a customer A who is active on Bithumb transfers $750 million worth of Bitcoin to Upbit, then Upbit, as the exchange holding that $750 million worth of Bitcoin, this means that $750 million in liabilities will be added to their balance sheet. Since Upbit is obligated to return the $750 million worth of Bitcoin whenever the customer requests a withdrawal, it essentially means they are in debt for that amount. In this case, Upbit may find it challenging to expand its business in the future because when attracting external investments or securing loans, the debt-to-equity ratio will be assessed as significantly high, which could negatively impact the business. Despite numerous objections from Congress, this SAB 121 bill, SEC Chair Gary Gensler and Biden have been engaging in a back-and-forth hindering and obstructing the growth of the cryptocurrency market in the U.S. Recent survey results show that a high percentage of U.S. citizens are participating in the cryptocurrency market, and facing various issues, Gary Gensler seems to be backing down. In New York, the oldest bank, BNY Mellon, was granted the first exemption under the SAB 121 bill. As soon as the approval was granted, BNY Mellon submitted its challenge to become the asset management partner for U.S. Bitcoin and Ethereum spot ETFs. This aligns with what I mentioned earlier. According to the current regulations approved by the SEC, asset management companies operating U.S. Bitcoin spot ETFs must hold a 1-to-1 ratio of physical assets to the incoming ETF funds. Previously, The purchased Bitcoin assets were exclusively managed and stored by Coinbase under a monopoly system. Now, traditional banking institutions like BNY Mellon will also enter the custody service business as partners. This could trigger quite a significant ripple effect. Compared to asset storage services for cash, real estate, and bonds, the services for storing and managing cryptocurrencies require more security and management elements due to the inherently unstable nature of cryptocurrencies within the regulatory framework, which is why they have been charging higher fees for these services. As more businesses enter the market, starting with BNY Mellon, which had been dominated by Coinbase, the competition will intensify. Improvement in the quality of cryptocurrency custody and management services. Naturally, as competition increases, the quality of security and management custody services will also rise. Reduction in custody and management service fees for cryptocurrencies. The likelihood of fees gradually decreasing also increases. Increased customer participation in cryptocurrencies. As the trust in custody services grows, customers' aversion to cryptocurrency trading will decrease, which will help stimulate market inflow. Increased profitability for ETF management firms. If fees decrease, ETF management firms like BlackRock and Fidelity will see a reduction in ancillary costs. Activation of marketing by ETF management firms. As profitability increases in brokering ETFs, they will be able to promote their products in the market through aggressive marketing strategies. Furthermore, looking at the history of the U.S. market, there is a strong tendency to place great importance on precedents. Notably, a recent topic in the U.S. presidential election is the precedent regarding women's abortion rights, specifically the 1973 Roe v. Wade decision, which has served as an important standard in American society for a long time. The SEC's lawsuit against Ripple is ongoing because the SEC has very few precedents of losing in such cases. They are engaged in a lengthy battle to avoid setting a precedent that would favor Ripple's victory. When a Bitcoin spot ETF was approved, numerous asset management firms received simultaneous approvals on the same day, reflecting the principle that if one brokerage is approved, other brokerages should be granted approval fairly as well. The significance of precedents in the United States is deeply rooted in various fields such as law, politics, and culture. The exemption of BNY Mellon under the SAB 121 bill is an important fact, essentially rendering the SAB 121 bill nearly meaningless. In summary, there was a ridiculous law called SAB 121 that hindered the growth of the U.S. cryptocurrency market. Recently, BNY Mellon Bank received an exemption under that law. BNY quickly entered the Bitcoin and Ethereum spot ETF custody, asset storage market. This suggests there is potential for profit in this sector. The emergence of competitors in the previously monopolized Coinbase market indicates that there is room for improvement both qualitatively and cost-wise in the competitive process. The increased quality will attract those who have yet to participate in the cryptocurrency market, while the decreased costs will trigger aggressive investments from ETF management firms, marking a significant positive development. Now, Gensler is trying to save his position by creating an exemption for the SAB 121 bill, but Trump from the Republican Party has stated that if elected, he will fire Gensler first. Meanwhile, the Democratic side, led by Harris, is criticizing the SEC's current regulatory approach and indirectly targeting Gensler. The Biden administration, once trusted and loyal, has vanished like a mirage. Just when Gensler had nowhere to turn, Mark Cuban appeared, adding to his troubles. For those who experienced the last bull market, this name might be quite familiar. Let me briefly explain about Mark Cuban. He founded the IT company MicroSolutions in 1983. Immediately after graduating from college, he founded an IT company called MicroSolutions in 1983, providing computer consulting and system integration services. In 1990, he sold the IT company MicroSolutions for $6 million just 7 years after its founding. In 1995, he founded Broadcast.com, a platform that utilized the innovative internet streaming technology of the time to broadcast live sports, music, and radio shows. In 1999, just 4 years later, he sold Broadcast.com to Yahoo for $5.7 billion, demonstrating his extraordinary foresight in the computer and IT fields and earning him a place among the billionaires. Recently, he appeared on the American TV show Shark Tank, where billionaires invest in various startups, showcasing his keen insight that remains sharp.
Today, we're raising $500,000 in exchange for 5% equity in our company.
The founder of a startup that developed a dating app called Coffee Meets Bagel sought to raise funds by offering 5% equity in his company for $500,000. Many billionaires rejected the investment, stating that it had no value.
Let me ask you a question. If I offered you $30 million for the company, would you take it?
Mark Cuban proposed not just to buy 5%, but to acquire the company for $30 million. The deal was ultimately unsuccessful due to the founder's refusal, but the current market value of the company is estimated at $500 million, which is 16 times Mark Cuban's proposed $30 million. The brilliant entrepreneur Mark Cuban showcased his talent during the last bull market by pinpointing key coins such as BTC, ETH, MATIC, DOGE, and AAVE, all of which left a significant mark on the crypto market. Having built a billionaire career in the IT sector and reaching the pinnacle of success, Mark Cuban, who is currently a pro-crypto investor with substantial investments in various cryptocurrencies, being considered a strong candidate for the next SEC chair, seems like a very positive development. Mark Cuban not only shows great interest in Bitcoin, but also in the altcoin market. He is someone who highly values the growth potential of the altcoin market. As of the current time, September 27th, 2 a.m., I am preparing the video. Bitcoin has just confidently broken through the $65,000 mark, and it seems like the bull market is warming up. With the altcoin market also being highly regarded by the genius entrepreneur Mark Cuban, shall we take a look at the themes you need to get ahead of in order to ride this major bull run and transform your fortune? The first theme is the well-known RWA, real-world assets sector. The RWA sector plays the role of bridging real-world assets with blockchain-based assets. There are various reasons to believe that the RWA theme will heat up in the near future, coming from multiple perspectives. First, for a major bull run to occur, the essential factor is the inflow of new capital into the cryptocurrency market. When national currencies like the dollar, yen, euro, and won flow into the market, this becomes a prime example of how market liquidity is supplied. With the emergence of the RWA sector, various platforms are being developed that allow individuals to use real-world assets such as bonds, stocks, real estate, and even items like wine, gold, and cars as collateral to enter the cryptocurrency market. By looking at the on-chain data provided by rwa.xyz, you can see that a wide range of collateral assets, including government bonds, real estate, and stocks, are steadily flowing into the crypto market. Coins in the RWA theme can be seen as playing the role of an exchange between the real-world asset market and the cryptocurrency asset market. As real-world assets flow into the crypto market and profits generated in the crypto market exit, transaction fees and commissions are created in the process. This makes the RWA sector one that is poised to grow alongside the expanding scale of the cryptocurrency market, benefiting directly from its growth. Recently, Chainlink's co-founder also mentioned that RWA could be a game changer, connecting traditional financial assets with the cryptocurrency market. Additionally, BlackRock is known for utilizing the Beetle Fund through ONDO Coin and Ethereum. Ondo Coin, a representative of the RWA sector, currently has only about 13% of its total supply in circulation, meaning a very small amount is actively traded. With no significant unlocks scheduled before January 18, 2025, it can be interpreted that even small market movements could lead to large volatility, given this structure. The second theme is the sector of new assets tracked by the Grayscale portfolio. For those who have experienced past bull markets, this will likely resonate. Altcoins selected by Grayscale, such as BAT, LINK, BCH, FIL, and MANA, have shown especially strong performance during bull markets compared to other altcoins. Even Solana, which was on the verge of collapse due to the FTX bankruptcy, managed to make an incredible 25 times increase, reclaiming its throne. Recently, Grayscale has been rebalancing its portfolio by reducing its holdings in Bitcoin and Ethereum ETFs, and true to its reputation as the first cryptocurrency trust institution, has restructured its altcoin portfolio. Grayscale is now expanding its portfolio in various directions, including Layer 1 and 2 platforms like Avalanche, MakerDAO, Near, Stacks, and Sui, as well as the Bitcoin ecosystem and the RWA sector. Given Grayscale's deep expertise and history in the crypto market, it might be worth following their lead. Among the newly added assets in Grayscale's portfolio, the standout ones are Stacks, Near, and Sui, compared to older portfolio entries like LivePeer, Litecoin, and Ethereum Classic. These newer assets have a significantly smaller scale in terms of assets under management. The fact that the newly added assets have a significantly smaller scale of assets under management suggests that it is almost certain Grayscale's buying pressure will come into play as they increase the proportion of these assets in their portfolio over time. The third and final sector is blockchain infrastructure. One of the easiest ways to follow assets that show explosive growth is by getting on the same boat as the major players, don't you think? The image you're seeing is a list of venture capital firms that have invested the most in cryptocurrency projects over the past year. In the last year, These venture capitals have invested anywhere from tens of millions to hundreds of millions of dollars in 40 to over 90 projects, placing significant bets on the altcoin ecosystem. Over the past year, I took a closer look at the investment activities of venture capitals, and one common theme among altcoin projects that went through large funding rounds is blockchain infrastructure and GameFi. We are now in an era where countless applications and networks operate thanks to blockchain technology. It seems institutions are betting on projects related to forming the infrastructure that will connect numerous chains, as well as on the fast-growing gaming sector, which is among the most visually impactful. However, since many of these projects have been relatively recent investments, there aren't any standout coins that have gone through the listing process just yet. The strategy of getting in on coins that are undervalued during their early listing phase often allows investors to aim for significant returns with relatively small amounts of capital. As soon as I discover promising coins in this sector, I will share the information through the Telegram channel. It looks like it's already past 6 a.m. as you've finished scripting the video. I'll soon prepare a live broadcast where I'll go into more detail on the top 3 promising altcoin sectors revealed today, as well as cover one hidden theme that hasn't been disclosed yet. Now, to summarize today's video, it seems that the selling pressure from Grayscale on Bitcoin has eased, and alongside BlackRock's consistent buying, Fidelity, one of the world's largest asset management firms, appears to be officially entering the scene. Given Fidelity's typically conservative investment approach, their active participation in the market holds significant implications. There are rumors circulating that Coinbase and BlackRock may not have actually bought Bitcoin yet, but if those rumors are true, it raises the possibility that BlackRock's real buying pressure might come into play later on. According to a survey conducted by Citigroup, most family offices of royal families that have accumulated wealth over 3 generations or more have not yet entered the cryptocurrency market. Notably, 83% of family office funds in Latin America, particularly in Brazil, are identified as potential buyers. This indicates a significant untapped buying power in that region. Bank of New York Mellon has become the first to receive an exemption under the SAB 121 regulation. Given the precedent-driven nature of American society, we can expect to see a rapid increase in similar exemptions being granted. As more institutions fall outside the oversight of SAB 121, US-based cryptocurrency companies are likely to experience accelerated and advanced growth. The fact that pro-crypto advocate and billionaire in the IT sector, Mark Cuban, is emerging as a strong candidate for the new SEC chair could be seen as a potentially powerful positive development. It's important to pay attention and prepare for the explosive potential in the altcoin market, particularly focusing on the 3 key sectors: RWA, Grayscale's new portfolio, and blockchain infrastructure. I will be providing over 40 cryptocurrency investment lecture videos for free. Lastly, I plan to cover these topics in more detail during a live broadcast, so make sure to attend and take advantage of the valuable information. Since it's been a while since my last video, I had so much I wanted to say, and I hope I didn't end up rambling too much. Thank you for watching for such a long time, and I'll see you in the chat room until the next video. This was Bichelin.